All right, guys, Alibaba stock. It has been doing well, just as I predicted on this channel. So I haven't made a video for a while, but we're coming in here for a little update here. So first and foremost, we're going to get into the chart, and you can see that it has been going up, which is what we want to see. So realistically, the structure of this chart is looking pretty solid. I mean, we kind of broke out here. We got a little bit overextended. It was pretty much up only there for a few weeks with all the bullish AI news, all the buzzwords that everybody likes to hear cause the stock to go up. We're in a little bit of a pullback now, but it's nothing concerning. We're holding all the key sort of structural points, hanging above the 50, which we could very easily revisit, but who cares? You know, we're long-term investors here. We're value investors. Don't care about little bumps in the road. So I'm holding this stock for quite a bit of time here. You know, my goal is to make money on this stock. You know, I built up a nice position throughout the bear market. These little blue arrows are the buys that I've made consistently over kind of the 2-3 years of the bear, just kind of buying, building up my position because I knew that the fundamentals were still there. I knew that China was not going to fall off as a rising global superpower. I knew they were going to come back. So I decided, hey, I'm going to buy the biggest and the best within the company or within the country, right? I was like, okay, so China's not going away. You got a stock here that is profitable, generates free cash flow, is trading at generational lows in terms of their PE. So I'm going to make a bet on China. I'm going to make a bet on the largest company or one of the largest companies within China. And that's what I did throughout the bear. I just consistently acquired shares, built up a nice position, and now I am just happily ready to ride out this bull market. And the bull market is still young. Let's be clear. Let's be clear. The bull market is still young here. And realistically, Baba did not even enter a bull market until it cleanly sort of broke this kind of key level here, right? Once it broke this key level, that was kind of the official beginning of the bull market. So you had this nice surge here, breaking that level. Then you kind of got a little bit of a retest and it kind of wiggled around in here. And now we broke out again on, of course, AI, right? Market loves that Baba is positioning themselves as the AI leader within China. I mean, that is huge, right? You have the AI leaders in the United States, and just look at the valuations that they command. Just look at Palantir, look at NVIDIA, look at the other names, right? These AI stocks in the West are absolutely killing it. But of course, the market was like, oh, well, what about the rest of the world? Okay, the market's beginning to wake up to the fact that AI is a global trend. It's not just a US trend, it is a global trend. And Alibaba has been strategically positioning themselves as the leader of AI within China. And if you look at the current valuation of Alibaba stock, it is still extremely low. Not to mention the fact that their business outside of AI, like their core commerce, their international commerce, logistics, etc., those businesses are beginning to pick back up as well. And then you have, of course, cloud, which is what the market's really excited about because you have triple-digit growth for AI-related services for their cloud business. And you know, once cloud is really built out, that is going to be a high margin business for the company. It'll likely be their highest margin business. And to see that have the growth numbers that it currently has is very encouraging. It's very bullish. So when it comes to sort of my expectations for the stock going forward, I think it's going to go much higher. Now, assuming, you know, that we don't get like some sort of global financial crisis or something like that, you know, assuming that nothing like that happens, we're going to continue to trend higher. I think the overall economy within China is going to continue to improve, especially when we get a trade deal. I think we're going to get a trade deal at some point, or eventually just the trade war in itself is just going to lose potency in terms of the fear, right? How many times can, you know, Trump scream trade war until the market just eventually gets desensitized to it and it's no longer really a fear because every time he, you know, flares up the trade war, you know, everything just goes back to an all-time high, right? So despite the trade war, if, you know, Alibaba continues to post good numbers, the market's going to kind of view it as an afterthought. And of course, if we do get a trade deal, that's going to be a very positive catalyst for the stock going much higher. And what's also interesting about Baba is that even if you look at its current stock price at 166, this is the same level that we were trading at way back in 2017. Way back in 2017. So, yeah, we're trading at the same price that it was trading at 8 years ago. And if we look at a revenue, for example, look at the revenue that we were posting back in 2017. Back in 2017, Alibaba had $22 billion in revenue, and now last 12 months we've had 140 billion in revenue. So revenue has increased about like 6.5 fold the last 8 years, but the stock price is exactly the same, which is ridiculous. So that goes to show that the price of BABA has been suppressed for a long, long time due to all the factors, right? Chinese government cracking down on their tech companies, of course, their economy being locked down because of the pandemic, because of fears that these equities are going to be delisted. All the fear, all the fear, all the fear has really suppressed the price of BABA. But my general thesis throughout the bear market was that, look, China is not going to be taken off the map. Sure, it had some problems in the short term. It had a recession after a massive, economic expansionary period. They hit some rough times. That is normal. Okay, but realistically, what is the probability that China is not going to be a rising superpower, global superpower going forward? Because their economic growth rates still exceed that of the United States. There's so much room for economic expansion in China that I just do not see them, falling off. I mean, that's just crazy to say that, oh, China's done. China's no longer a threat. Oh, they made a couple of mistakes and now they're going to go away. That's not going to happen. China's going to continue to advance their global dominance, and their largest companies are going to continue to grow, and their growth is probably going to exceed that of the United States. There's just more room for growth in China. There's just more people. There's more room in terms of raising up the middle class. And then, of course, Baba has international businesses as well. And another thing is, like, now that they're positioning themselves as an AI leader, I mean, that is a tremendous tailwind for the company, for the stock. So I think we're still in the early stages of this bull market. Of course, we can get a pullback. Of course, who knows? There could be some sort of recession or liquidity event within the economy. Who knows? But I think the bull market is still quite early. And if you are holding shares of Alibaba and you bought them, let's say down here when it's much cheaper, there's no reason to be selling right now. It's a hold. It is absolutely a hold. And if you haven't gotten to the stock and you do want to get into it, there's going to be opportunities for sure. Maybe it's a little bit overextended in the short term, but if you have a time horizon of 2, 3, 4, 5, 10 years, whatever it may be, you can slowly begin to buy. You don't have to buy your entire position all at once. You can just dollar cost average in. And I think it's just in terms of growth, AI, even e-commerce. Like, you're not going to get a better deal in e-commerce because Amazon right now is trading at, I believe, like 32 times earnings. So their current PE is about 32. Right now, Baba's current PE is 19. So, and of course, Baba is also growing faster than Amazon. So you're getting a somewhat similar growth rate for significantly less. So when it comes to e-commerce, it's still actually one of the most undervalued players just in e-commerce. And then if you were to look at AI itself, you're not going to find an AI play that's cheaper than Alibaba right now, especially a dominant leader within their region. So sure, you can find like, small cap AI players in the United States that maybe are cheaper, but they're not the dominant leader, right? They're not the leader within their region. So the fact that you're getting the number one name within China for AI and e-commerce for this price is very intriguing. It is very intriguing. So also, if you look at, let's see here, let's take a look at this here, this Morningstar report. There's a lot of bullish stuff here. Again, of course, it's all about AI. So Alibaba increasing investment as AI infrastructure demand exceeds expectations. So again, AI is just going crazy for Alibaba. Their infrastructure demand is exceeding expectations. Valuation rises 49%. Okay, Alibaba will increase capital expenditure beyond the committed CNY 380 billion as AI infrastructure demand is exceeding expectations. Very bullish. It anticipates its global data center energy use to be 10 times above the 2022 level by 2032. So that's 10x growth over the next decade. And will partner with NVIDIA to build physical AI capabilities. Why it matters. We think higher capex is essential to meet the stronger than expected demand for artificial intelligence infrastructure, domestically and internationally. The projected surge in global data center energy consumption signals a robust outlook for cloud revenue. Okay. The physical AI collaboration will drive AI adoption across industries such as auto and robotics. Interesting. Alibaba's increased investment in overseas data centers, competitive performance, widespread use of its open source models, and improved performance of its self-developed chip all supports cloud revenue growth. We now assume CapEx will average 15% of revenue over the next 3 years, resulting in an 11% average lift in cloud revenue over the coming decade versus previous forecasts. A higher contribution from high margin AI revenue, that's sort of another keyword. High margin, right? As I said, this cloud revenue will be their highest margin business, most likely. So high margin AI revenue led to a 12% average increase in our adjusted EBITDA estimates, or EBITDA estimates. The bottom line, we raise wide moat Alibaba's fair value estimate by 49% to USD 267 a share, reflecting strong cloud profits, higher stage 2 assumptions due to AI demand, and reduced holding discounts of non-current investments to 10% from 30%. The shares appear undervalued. So they're expecting, their projections are 267 per share, and the current stock price is 166. So that implies upside of about 60%. That's pretty bullish. And it's funny though, because all of the talk is about AI. Like, let's not forget that Alibaba is a conglomerate, right? They have a lot of businesses. So if these other businesses continue to accelerate and exceed expectations, that's a whole nother catalyst that the market isn't really even focused on right now. And these other businesses also provide kind of a valuation floor because they're pumping out free cash flow. So a lot of AI companies currently publicly traded, they're sort of AI pure plays, and they don't produce any profit, right? They do not produce any profit or free cash flow. So it's all speculative. With Alibaba, they actually have a very good fundamental foundation laid because their core businesses, like their e-commerce businesses, logistics, etc., are generating real revenue, real free cash flow, and are also growing. So you're getting all of those businesses cheap, and then you're also getting the exciting sort of AI cloud business as well on top of that. So it kind of creates a perfect storm of bullishness here. And as I said, I think we're still pretty early to this bull market. And if we don't get a global liquidity crisis or recession, etc., I think we're going to challenge the all-time high pretty quickly here. We could challenge this all-time high within the next year, realistically, if the market continues to grind up. And so there's still a lot of upside here. And over the next decade, I mean, who knows what China's going to do? China could really begin to come back in terms of their economy and growth. And, things are still looking pretty good. I mean, because we're still early to this bull market. So if you're in the stock, just hold on. There's really no reason to sell right now, unless something structurally changes, right? So if there's a big structural shift for whatever reason, then maybe you can, reconsider. But the way things are right now, I mean, this flywheel is spinning and it's accelerating. So I'm just happy hanging on to the shares that I acquired during the bear, and I fully plan to ride out this bull market for quite some time here. So overall, those are my thoughts on Alibaba stock. Thank you guys for watching.